This is my weekly episode where I take a closer look at 4 stocks I'm keeping an eye this week for potential buys. Like many of you, I put money to work on my portfolio on a weekly basis. So every single week I'm either looking for a new investment or old positions to kind of increase my overall portfolio and eventually end up financially independent. So the four stocks I'm looking at this week are Qualcomm, Meta Platforms, Alphabet, and Shopify. All 4 stocks are already in my portfolio, but I want to increase my overall position size. We can see right now Alphabet is down roughly 18% from its all-time highs, Qualcomm down roughly 20%, Meta Platforms down roughly 52%, and Shopify roughly down 76%. And before we go any further, I want to take a closer look at what are some of the bearish points for each company. I do believe it is important to understand what's happening in the negative side before I get to talk about why I'm bullish in all of them.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So let's start off with Qualcomm Semiconductor company. Right now, unfortunately, a good portion of its revenue comes from mobile devices, and with the way the macroeconomics are working, many fear that consumer spending is going to go down and is going to cause a huge hit in Qualcomm in forms of its revenue. Next, let's take a closer look at Alphabet and Meta Platform. Both these companies deal in the advertisement space, and unfortunately with the macroeconomics, we are seeing a slowdown in advertisement spending. Normally, companies start to cut on expenses when things start to get rough, and usually that deals with the advertisement market. Another thing is both companies are seeing huge competition with the likes of TikTok. Facebook also has added bearish thesis to it. For example, the overall changes that Apple has made that kind of reduces the amount of third-party data they collect. Finally, the last company is Shopify. Many are seeing a slowdown in the consumer market, so obviously e-commerce is taking quite a hit, and we have seen Shopify definitely reduce that growth that they have seen in the past. So now that I shared some of the bearish cases, I want to explain why I'm bullish in each company. So let's start off with Qualcomm, ticker QCOM. I do want to say Qualcomm does come with a dividend yield of roughly 2%. So not only does this have growth opportunity, but it also has dividend opportunities as well. So if we take a closer look, Qualcomm most recently reported revenue of roughly $10.9 billion, up 37% year over year. Like I mentioned earlier, we can see handset, which is mainly mobile devices, make up a bulk of that total revenue. I do believe there are 2 huge growth opportunities for Qualcomm. The first one is a smaller one, and one that will take a long time for it to become more dependent, but that is the automotive market. Roughly $350 million of total revenue this recent quarter, but they have numerous design win pipelines of over $19 billion and are making huge kind of leads into big players in the automotive space. The one that I believe is the closest and huge growth opportunity at the moment is Internet of Things, which is roughly $1.8 billion. So like I mentioned, Qualcomm provides processors mainly for the mobile devices, but those kind of processors can be used in numerous things. Here, for example, they show that Internet of Things, how they can hit the consumer market, the virtual reality, XR market, wearables, consumer electronics, the infrastructure and edge networking, and even in industrial like manufacturing, smart robots, retail, smart cities, energies, and so much more. On their most recent Investors Day, they did give a target of up to $9 billion of revenue will be coming from Internet of Things market. So we can see this is definitely a play that they see huge growth within the next 2 years. And like I showed all the kind of revenue streams, I definitely believe this is possible. The next 2 companies I want to take a closer look at kind of together, and that's going to be Meta Platforms and Google. But first, if you are enjoying this episode, make sure to hit the thumbs up as it helps me grow my overall audience, and I truly appreciate it. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. You guys know I am a content creator. So as a content creator, I have to honestly focus on where eyes are at, because that's where I should kind of create my content into. A person I follow in the content creation market that has been pretty much right in where the eyes are has been Gary Vaynerchuk. In the most recent video, he kind of talks about where he wants to double down on content in 2022. And in first place is YouTube Shorts and Facebook Reels. Second place comes in with TikTok, followed by Instagram. And this is someone who has been putting TikTok in top place for the past few quarters. So you can see how things have changed. And obviously in Facebook, one of the major changes is this is a company that has been investing a lot in artificial intelligence to combat that competitive nature of TikTok. If that's where eyes are at, can you guess where advertisement is going to go in the future once it comes back? is going to be in the platforms where the most eyes are at the moment. So Meta Platforms, ticker Meta, like we saw, has taken quite a hit from its 52-week high. And in this most recent earnings, we can see its revenue did not grow much. Obviously, macroeconomics are definitely hurting this company at the moment. But they do mention that, hey, they are seeing strong engagement due to their products like Reels and their investment in artificial intelligence. And like I mentioned, it is great to hear that from management, but then to see it from someone who is focused in the content creation like Gary Vee kind of verifies what management is saying here at Facebook. So I do believe there is huge growth opportunity for Facebook at the moment, and I definitely want to increase my position here. With Google, I mean, Google is a beast, right? This is a big player. Sometimes you just want to have big players in your market, and I do believe, hey, even though their revenue only grew 13% year over year in their most recent quarter, this is a market that can continue to grow. And also YouTube Shorts is continuing to be really positive. And as a content creator myself, I also see all the kind of solutions that YouTube is working on, and it makes it a lot easier for us as content creators to push into YouTube Shorts. So these two are ones that I see from experience and from people that I follow that are very knowledgeable in this market, more in the solutions aspect, right? And I think that's very important. So I am super excited to try to increase my exposure in Google and Meta. So the final company is Shopify, and this is one that has taken huge hits. Some of my favorite things about Shopify right now is just the overall growth that this company is seeing. First, going global. Their Shopify point-on-sale hardware and integrated payments are now available in 13 countries, with the addition of Italy in Q2 and Singapore in July. So we can see they are definitely expanding in that global market right now. And finally, this is a company that is always providing new solutions or making partnerships with big players to make it very easy for the e-commerce market to grow. For example, they recently partnered up with YouTube, where now I can post my store on the YouTube channel. They've done the same with Spotify, with TikTok. They're working with Meta Platforms to improve their advertisement market. So this is a company that is continuing to move a step forward. And for me personally, I use Shopify to create a store in less than a day. Obviously, I've had some experience in the past, but I was able to create this store in less than a day, set up all my payments, set up distributions, set up inventory, set up items in less than a day. And I want to say, I think this is pretty impressive. I personally don't know any other platform that can allow a content creator to build an e-commerce store in so little bit of time. So I do want to say all four companies have solutions that at the moment I feel are unmatched, and to me, I feel like this is a great place for me to put my money into. So let me know in the comments below, what are some of the stocks you are looking at this week? Take care, have a good day, and see you next time.